Hello, fellow traders. Tis I, the Rumpled One, coming to you on Tuesday, June the 14th. The year's 2022. Let's talk trading. Managing the Trade, Part 2 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, yesterday, I talked to the boys and girls and non-binaries about managing the trade, how sometimes you exit because of the chart, you exit because of your risk management, or you exit because you want to take money off the table. What's your take?
Yeah. Yeah. Um, well, maybe I trade differently than some folks, but I look at it in terms of pure money management. Everything I do is based on money management. You know, the whole idea of just trying to go and maximize my wins and minimize my losses. But if somebody's going to go out there and say, yeah, but you said in a video not too long ago that you're happy just taking 1 or 2 pips. Yeah, that's what I do sometimes because I'm trying to maximize my wins, maximize the amount I'm winning. And sometimes, depending on what the market's showing you, that's the best way to maximize. People have this idea, I think, of maximizing means that what you got to do is you got to get that 20 pip run. You got to get that. If you're not going and taking 20 pips on every one of your trades, you're not maximizing. In fact, I read one guy said, hey, if you're scalping on the pound dollar, you need to go getting at least 12 pips on the scalp. And I would disagree with that. It all comes down to what's your win rate. That's the first thing, and are you making sure that you follow your rules? And you'll say, what do you mean by what's your win rate? Well, typically I'm usually running somewhere around 70 to 88% is what my win rate is for any particular day. That's just generally where I'm at. So based on that, I can go and take 2 pip, 3 pip wins and not have to worry about pullbacks. And that's the thing that you got to worry about is the pullbacks if you're trying to trade the way I'm trading. Whereas if you're sitting there and you're just trying to go and do, swing trading, a pullback of 15, 20, 30, maybe even 50 or 100 pips is no big deal, depending on how you're swing trading and what chart you're using. And so you can maximize your profit in a different way than I'm doing. I'm maximizing it by going and making sure that I'm trying to go and win the most number of trades that I could possibly win. But that's not all of the story. What you also got to do is minimize the losses at the same time, because I can win 98% of the time, and if I don't go and minimize my losses, I could actually be an unprofitable trader. So I got to be very careful with that. So what does that mean? That means when I see things going south, things not doing the way I want it to go, the market, there's the old expression, the market doesn't owe you anything. And that's exactly right. Just because I think the market's going to go up doesn't mean it's going to go up. And if I see that it's not working according to plan, get out. Take the loss, take a small loss, and you can make it up, on the next trade or 2 or 3 if it takes that much. There was one trader out in the forums not too long ago and said, but if you take a loss of, 7, 10 pips, well, my first thing is, well, why are you taking a loss that big? But even so, if you take that and you're only winning 1, 2, 3 pips, yeah, okay, but if you're winning 70% of the time, you'll go and you'll make that all up, and that's all that matters.
Yeah, it's really interesting some of the way people talk on these trading forums and videos, and they just seem to forget that, one of my favorite sayings is there's more than one way to skin a cat.
Exactly, and that's the thing, if you get it, fellas, guys, girls, non-binaries, whoever you are out there, if you get anything from what I'm saying, and it's just simply this, and there is no one method out there to take a trade. It doesn't exist. Now, what there does exist is there are many, many methods that are out there, And all of them can be equally profitable and equally unprofitable. And the question is, what are you doing to manage your money while while you're in that trade? That's the thing that matters. Because, if you're taking trades and you're jumping in, I'm going to tell a story on you, Hero. You said to me on the phone yesterday afternoon when we were talking, you said, you tend to get yourself into trouble sometimes by jumping in too early on pound dollar trades. Okay, you know that.
Right.
Okay, what are we going to do with that? The thing is, you need to either go and find a way to stop you from, from taking those trades and waiting till when you're supposed to properly enter, or you find another way to, once you're in the trade, because, find a way that you can go in and make sure that it works out for you, or at least try to make it work out for you. Now, I admitted to you on the phone yesterday also that I tend to do that. And my way of combating that is that, and I know that people are going to go and yell at me for saying this, but that's okay. If I really truly believe that, let's say I believe the pound's going to go up, and I jump in, but I jump in too early, I didn't get all the things I should have done, I got to immediately make a decision. Either just jump out and take the small loss there, 1-2 pips, which I do all day long. Okay. Or if I really believe this thing's going to rocket in my direction, I'll wait for the actual signal I should have waited for, let it run against me, and then at that point go in where I should have gone in, and maybe gone in, and then once it proves itself out, go in, stack in again, and then I will more than make up for that where my poor decision was, and usually I'll get right back to about where I got in the very first time, and then I just get out of all three trades at that point in time. Now, there's a couple caveats to all that. One, it takes some experience to go be able to do that. Okay, that's the first thing. This is not a newbie thing to do. This is something that you need to go and have a couple of years under your belt to go and do that. The second caveat to all this is you need to be disciplined. And here's the big thing with that. Okay, you weren't disciplined when you got yourself into the mess in the first place. So you better be real sure about what you're doing now. You already admitted that you weren't disciplined. Now, what's going to go and say that you're now truly disciplined now? And then the third thing is you need to go and be willing to go and say, hey, this could be a big loss, so I need to go and adjust the way that I trade. I know that I do that. So let's say my trading account says I can go and trade, 5 lots. Well, when I take my trades, I better not be taking a 5-lot trade. I better be going and taking a 1 or 2 lot trade so that I have room for that adjustment. And that's part of that money management thing. And you got to be, recognizing who you are and being able to adjust, to that.
By the way, did you take the Walmal trade at 70?
I did.
I figured.
And I got out.
Yeah.
I did, and I got out with about 6.5 pips after paying commission. But it's and here's another thing, a money management thing. People say, well, you could have gotten out and you could have had as much as like almost 12 pips if you would get it. Yeah, that would have been picking a top. I don't know about you, but I've never been very good at picking actual tops. It just never seems to work out that way for me. But look at it now. It looks like it's going to make another attempt. You're right, it is. I don't know what the market's going to do. What I do know is that on that very first, M1 candle, okay, that M1 candle went and ran up like 7 or 8 pips. So I know that's unusual for an M1 candle to do that, And then I get the second candle and it started to go up. Hey, I just made a good dent into what I need for the day. Hey, go take that. Put it in the bank and walk away and be happy, Now, that's just my way of trading the market. Somebody else can come along and say, no, That's not the way to do it. The way you maximize, you want to go and manage money, you got to maximize your profits, absolutely, and you got to minimize your losses, absolutely. And their method of going and doing that is that, hey, after that big first candle there, you know what? There's a good chance this thing is going to continue. I'm going to go and take my trade, and I'm going to stack on. And I'm going to put a second trade on there, okay? And then they could have not only had, when this ran up to where it was like 82 or 83, they could have had that first 12 or 13 pips, and then they could have, they would have stacked in like at about 77 or so, and they could have had another 5 pips. Yeah, absolutely. That's a great way of doing things. But at the same time, it's not my way, so I won't do that. Or I tend not to do that. That's not that I don't do it. It's a better way of saying it is that it's not something I normally do. Another person could come along and say, hey, I'm up 7, 8 pips right now. I think this thing's going to continue. I'm going to take half my profits off the table right now, okay? And I'm going to put half of it in the bank, and I'm going to leave the other half to see where it runs to. Let that be the thing that I do. And then I'll take that second half of the trade, and I'll go and figure out where my stop loss should be so that I don't lose any money on that second half of the trade. And so, that's another thing you can do. That way you guarantee, 4 pips in the bank, and no matter what happens, you guarantee 4 pips in the bank. And it's a potential that if you do get that big runner of, 10, 20, 30 pips, you can go and, maximize that amount of additional money. These are all different methods, and I can't tell you what the right one is. All I can say is that I've tried them all, and I know what works for me. And everybody else out there has got to do the same thing and figure out what works for them. And the reason why it works for me and not for you, or it works for you and not for me, again, comes down to when I'm looking at the market and I'm watching the charts, what is the psychology and emotion that's going on in the background? How is that affecting me?
Yeah, that's the big one, and that's where the individual comes in. In fact, I read something. I think I might have even put it out there in an email to you about stoicism and trading, where you're not supposed to have any emotion. And the other thing they says is you have to be patient. And we talked about patience, I believe, in a video last week or maybe the week before, where patience is waiting pretty much without emotion.
Yeah. Oh, I'd agree. I summarize that. I summarize that as discipline. But yeah, it's the same thing. And you got to be willing to go and do that. And I think that's what differentiates someone who's making money and someone who doesn't. Do you have the patience to go and wait for your trade, and then once you're in your trade, wait for whatever the triggers are for you to get out based on what you have decided is best for you to do. For me, it may be that it's best for me to get out because, I may have a time limit on a trade and say, if this doesn't produce after, 5, 10, 15, 20 minutes, whatever that number may be, get out. Whether I'm underwater or above water, just get out. Because that'll save me for the rest of the day in terms of psychology. It may be that my reason for exiting is based on a number of pips, either direction, positive or negative, but you need to have those things in place. And then most importantly, you need to have the patience to go and fully execute it. Because if you don't fully execute it, what's the point? Why do you bother going sitting down and writing out a trading plan in the first place?
Yeah, and you know what? Talk about patience. The fastest 15 minutes of trading has just gone by once again. So, fellow traders, you have Walmal takes on it. So, what's your take? Maybe you can post in the comments, and we'll probably revisit this topic again about managing the trade, because it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.